Shop Proprietary Limited runs a chain of retail stores. It remunerates its employees primarily by salary. However, some employees receive non-cash benefits such as private use of a car leased by Shop, extra superannuation contributions, and free laptops. Let's examine Shop's situation regarding its remuneration of one of its employees, Ben. During the year, Ben has been provided with a salary as well as superannuation contributions. Shop also leased a car for Ben's private use and paid for the car's expenses. Ben also received a laptop used primarily for work. Also, Ben was reimbursed for the costs of a holiday to Bali due to him exceeding work targets. If an organisation gives its employees benefits instead of salary, then without FBT, this would lead to a situation where no income tax would be paid. Therefore, the policy behind FBT is to assess benefits provided to employees that are intended as remuneration. The tax is intended as a substitute for employee income tax, which would be payable if the amounts were received as salary or wages. This helps minimise the incentive to secretly pay staff via mechanisms such as paying school fees, providing a car, or other physical benefits. However, whereas income tax for salary received by an employee is paid for by the employee, FBT is paid for by the employer. Another difference is that the FBT year runs from the 1st of April to the 31st of March. The first part of the process in deciding whether FBT applies is to decide whether there is a fringe benefit. There are 3 requirements to establish a fringe benefit, which broadly focuses on establishing that a benefit is provided to an employee by an employer in respect of employment. The first requirement under the definition of fringe benefit is that the benefit is provided to the employee or associate. The term benefit is defined widely as including a right, privilege, service or facility. This would include items such as providing the employee with property, use of goods, giving the employee services, as well as giving the employee a loan or insurance. The reference to an employee's associate would include close relatives of the employee, so that if a benefit was given to an employee's spouse, this requirement would be fulfilled. The second requirement is that the benefit was provided by the employer, associate, or arranger. The reference to the employer's associate would apply if the benefit was, for instance, given by the parent company of the employer. A reference to an employer's arranger would apply, for instance, where the employer arranges for its client to give a benefit to an employee of that employer. The third requirement is that the benefit provided be in respect of employment. So for instance, if a boss gives her daughter, who is also her employee, a birthday present of a new car, this would not be a fringe benefit. On the other hand, a boss that remunerates their employee for their work with a car that can be used privately would fulfill this requirement. There are also some legislated exclusions. So even when these requirements are fulfilled, the legislation states that some benefits are not regarded as fringe benefits. These include salary and wages, most allowances, and superannuation fund contributions. Exempt benefits are a subset of benefits excluded from the definition of fringe benefits. The FBT legislation has a large number of exempt benefits. For instance, an exemption applies to minor benefits that are infrequent and irregular, and have a taxable value of less than $300. In situations, it would be reasonable to treat the benefit as exempt. Another common exempt benefit is the provision of portable electronic devices, protective clothing, and other accessories used primarily for work. Note that in general, there is an annual limit of 1 item of each type per employee that can be subject to this exemption. The provision of employee subscriptions to professional journals, corporate credit cards, and airport lounge memberships are also exempt benefits. It is important to distinguish between allowances and reimbursements. Allowances involve giving an employee a fixed amount of which they can keep, regardless of how much they spend. They are not generally subject to FBT, but rather income tax. Reimbursements involve the employer giving to the employee only what the employee spent and are potentially dealt with under the FBT regime. Note that to avoid double taxation, the provision of fringe benefits is non-assessable, non-exempt income in the hands of the employee. Also, the provision of exempt fringe benefits is non-assessable, non-exempt income in the hands of the employee. The payment of FBT is tax deductible to the employer. Also, the cost of the provision of the fringe benefits themselves is generally tax deductible, net of any input tax credits claimed. Let's go back to Shop Proprietary Limited's situation with Ben. Ben had salary and super contributions. Ben also received a laptop and was reimbursed for his Bali holiday as a bonus. Plus, he had private use of the leased car. How would you classify each of these items from an FBT perspective? The salary is excluded from the definition of fringe benefit and is subject to income tax. The superannuation is also excluded from the definition of fringe benefit and is subject to income tax in the hands of the super fund. The private car is a fringe benefit and is subject to FBT, as are the holiday costs reimbursed to Ben. The laptop is an exempt benefit and so is both not subject to FBT and not subject to income tax. Once you determine whether there are one or more fringe benefits, the next step is to determine the type of fringe benefit. There are two reasons why categorising the fringe benefit is necessary. Firstly, some of the exemptions only apply to certain fringe benefits. Secondly, different categories have different methods of calculating the taxable value of the benefit, which will then determine the FBT payable on the benefit. If the employer has provided fringe benefits, after determining the type of fringe benefits, the next part of the process is to calculate the amount of FBT payable.